Good day, everyone, and welcome to today's fundamental breakdown. This is more like our digital trading forecast, market forecast for this week. So, diving into today's forecast, we currently see that the DXY, which has to do with the strength of dollar, is currently on a massive, strong support level. We're going to check from the monthly down to the weekly, then down to the daily, and finally the 4 hours. Here we have a main trend line, a monthly trend line, an uptrend line over here. Then we have a midterm trend line on the weekly, which we marked out over here. Then we have another midterm trend line on the daily. So majorly the DXY is currently on the daily midterm trend line, and it broke that daily midterm trend line over here. You can see that. But the major thing you need to also see is that although it broke that midterm trend line, you can see that we have a massive support area over here. A massive support area over here. From here, the market went up massively. From this point, the market went up massively up to this point. Then and came back now and is currently testing that trend line again. It's currently testing that support area, not just the trend line, but the support area. So currently we expect the market from this area to have a major pullback and a move to the upside, because we still have this trend line over here. This pullback can get to this point where we have our inner trend line for the H4, and from this inner trend line from the H4 we can see more push to the downside for DXY. So that's what I see currently on DXY. We are currently on a major support area. So from this major support area now, we can expect market to from this major support area, we can expect market to start moving to the upside. Because if we drop down to 4 hours, you can see that there is what they call high volume, a rise in volume or momentum, and then a drop in volume or momentum. So whenever this market comes into this creates a new low on the H4, let's take a good look at it. Over here we have a low. Whenever the market creates a new low, it creates a new high very fast, and then it creates a low here and creates a high, a low, creates a high. Every new low has an upwards move instantly. Over here we have a low, and this is showing that there is a drop in momentum. There's what they call rise in momentum and drop in momentum. So currently we're expecting market to, from that area for DXY, currently we have a drop in momentum. From here now, I already showed you in daily time frame, we're expecting it to come up. It's going to have to move up. DXY is going to have to move up, and from here at this 4 hours inner trend line, at this 4 hours inner trend line, we can now expect a more drop to the downside, because it already broke the daily midterm trend line. That is a support though. So this is what I see for DXY. So for DXY, I don't expect it to break this low. We have this is a low, this is a low, this is a low, this is a low. I don't expect it to break this major low. I just expect it to have a slight correction. After this correction, then you can start seeing DXY go to the upside. I'm expecting to have a slight correction, and after that it has to go to the upside. Although the market is reactive and not predictive, but I think with the fundamentals we see in the market, guys, is going to play out on Wednesday, the Fed decision, and on Friday the NFP. It's a very, very important event to watch out for. So currently on Euro USD, we have our validation point. This is the validation point, last green candle. And over here we had last week Friday's validation point, the bearish validation point, the last red candle here, but the market broke it to the downside though. So if we go down to based on the move we see on DXY, we expect DXY to what, have a little correction or pullback before the major push to the downside. So the same can imply on Euro USD. We can expect a major correction. You can expect from this point. Currently, it is at a validation point, a bearish validation point, which from here now is a support. We should expect market to come up, fulfill some efficiency to the upside before we then see the major push to the downside. I've marked out the move. The move for Euro USD can be very, very deep. It's going to fill this low. There's liquidity here. It's going to fill this low, fill this low, fill this low. That's for Euro USD. And probably come down to this validation point that has not fulfilled efficiency for a long time. All these validation points here, this one has fulfilled efficiency, all these ones has fulfilled efficiency, all these ones here has also fulfilled efficiency, but this validation point over here has not fulfilled efficiency. So you can expect market to really come down into here. And over here we have our daily support too. We have a daily support validation point which has marked out with this point. And also we have our weekly M structure. Let me show you that there is a structure that is formed there on the weekly. So over here, okay, no, that's on the daily. Yeah, it's on the daily, not on the weekly. So over here we see this. From here, market went up, down, up. So for an M structure to complete, there is a major support over here. There's a major support over here on the weekly. So we can expect a support at this point, which is also the neckline of this, and can also be seen as an optimization zone for the daily time frame. It's an optimization zone. So from here now, we can expect market to push up, because for the COT data, the banks are buying euro massively. We're still going to check that out. The banks are buying euro seriously. So but for the banks to buy euro, they are on sales already. They are on sales, so they need to take profit. So when they pull down this price to this point, say from here now, we cannot start expecting market to what, keep going up, which is where the major entries can be found at this area. So for the M structure, I have a target here. This is a 4 hours validation point that has not fulfilled the efficiency for a long time. So from here now, we can now expect market from either here. If I'm to use my first target, and then second target is over here. So if here is broken and gives us a continuation sell structure, we take the market more down. But when we get to this point and we don't see any sell structure, we start seeing buy structures, then we now start aiming for the upside. So that's what I see. But over here you can see this M structure. So that's it for Euro USD. That's it for Euro USD. I'll show you guys one or two more pairs. Yeah, very, very important. I need to show you guys oil. So I will show you guys, I will also notify you guys when I expect these pairs to move. So this is for the 4 hours. So we just have to be conscious of it. We still expect a little touch to the upside. Over here we have a support. We have a support over here. So I expect a little reversal. After the reversal, then the push to the upside. We have fulfilled efficiency over here. So I can still expect market to come back into this point. And take it from swing high to swing low. So I can still expect market come back into this 90% points. Also, we have our validation points over there. Before we can now say, okay, yeah, we can see some push to the downside on Euro USD. So the move can be sluggish, or the move can be sluggish when we get to this point. On Monday, Tuesday, the move can sluggish, but on Wednesday, when we have the Fed news and decision, then you can now start seeing more volatility in the market. So for AUD USD, I see a structure like this. So it's more like an expanding flat. It's an expanding flat, and it's an ending structure. We have some waves there already. We have some waves. So it's an ending, it's an expanding flat. And we have some a lot of drop in momentum. You can see this validation point, this H4 validation point. A lot of candles have resisted from going more to the upside from this point. So there is a major reversal area that is making the market towards continue moving to the downside from here. Whenever the market gets to this point, it moves to the downside. Whenever it gets to this point, it moves to the downside. So from what I can see, due to DXY, we expect a little correction or pullback, not reversal, before we see the push to the upside on DXY. We can also expect a little pullback to the upside on ADUSD before we can see some major push. This push currently now is more of a corrective structure of this whole push. It's not a reversal. Like, let me say, if I take this from here to here, it's more of a corrective structure. And when we aim for corrective structure, we either aim for equilibrium, which is this point, 50% point, or we aim for what? Discount. We aim for the equilibrium, which is 50% point, or we aim for discount. So that's the 2 points. But for AUD we're still on a bullish bias when it comes to the trading, although we're entering a new month. We're entering a new month. So that new month needs to find a lower week. The new month needs to find a lower week before we see some upwards push if we're going to be bullish on the new month. So if we do that with macro breakdown from monthly to weekly, there needs to be this push to the downside to find a new low before we find the new high for that month. I hope you guys get the point. So this is equilibrium 50 here, and this is discount 61. But if I am to look for the candle not this market has not fulfilled the efficiency. This H4 efficiency, it has not fulfilled it. So when there is a gap like this, markets usually comes down to fulfill this efficiency before they continue to push to the upside. Also, I can also see another validation point here. You can call it a second resistance, sorry, a second support that has not fulfilled the efficiency. Over here, it has not fulfilled the efficiency. Over here, this has fulfilled the efficiency, and this has not fulfilled. So this is the first one, just like Euro USD. This is the first one. When the market gets to this point, then I can now start, okay, this is what I see, that the market can reverse at this point. If it breaks that, then we're going down to this point. And if you see this structure, aside from being an expanding flat, I can see that this is more of an ascending wedge. If I should draw this structure more like this, this is an ascending wedge, and most times ascending wedge break to the downside after the end of an uptrend. An ascending wedge breaks to the downside. So if you want to be very conservative, you can wait for this wedge to break out, placing your limit order, because it can take the sellers a very tough time before they break the wedge. And then you place your stop loss. Principles of trading is to place your stop loss few ticks in on the resistance area in that wedge at the moment of breakout, and then you do your Fibonacci from the swing high to the swing low and take 50%. These are the principles to trade an ascending wedge when there's a breakout, if you want to be very, very conservative. But me, I'll be looking for my entries for the sell structure when the market gets into this top. So I'll be looking for the sell structure at this top when the market gets to this resistance area where we have a H4 validation point. That's what I'm looking for my entry. together with some macroeconomic breakdown. That's what I'll be looking for to get my sell. Then we have our validation point here, our H4 validation point here, which is more like the first support. We have first support based on reference theory. We have first support. If the first support is not that strong to hold the market, it's going to go down to the second support. So let's just look forward to that. Then we go down to oil. I just monitor these few pairs: Euro USD, AD USD, then oil, gold, and Bitcoin. That's just the five I monitor. Then for oil, it's fulfilled H4 validation point. From here, this was where I marked out that validation point from here. So when the market was here, we expected the market to come back here and fulfill this. But when we said that it's going to fulfill this validation point, it went to the upside, but it didn't fulfill it. Oh yeah, it did. It fulfilled it with this week and then returned back here. Which also we have another what bullish validation point at this point. And we're expecting the market to come back into here, but it never did. It came back here now and it has tested the validation point fully. It has tested it fully at this point. So if I am to look at what this market is currently giving to me, we have what this is more of an ascending triangle at this point. Ascending triangle at this point. So from what I see, ascending triangles are meant to break to the upside. It's meant to break to the upside. My major bias for oil is the bullish area, and we have a target of about $100 for the US oil. So inflation is going to be very, very massive this year based on oil price. If oil prices keep increasing, there's going to be inflation, and that's going to cause hyper recession. So I marked out that information over here. So over here we just expect, yeah, we have a break to the downside, but for fundamentals, what's currently going on in the oil industry, we're expecting the price of oil to go up. I think a structure that oil is going to form for us this week is more of a zigzag structure, which we expect market to still come into this point and test it, because there's a break already here. So from here now, we can expect market to still come back here, find a little support at here before we can get another push to the upside and more up. Because my bias for oil is mainly to the upside, to that $100 per barrel price. So it did not fulfill this efficiency. So there is another efficiency that is meant to be here. There's another efficiency. Let us follow up the market. Let's follow up the market one after the other. So we have this red candle over here. So from here now, we see that this fulfilled efficiency. We bring to this point full efficiency. Okay, so this is more like a zone. So from here now, there's a W pattern. I see this W pattern, which is more like this. From here, the market went to the upside. So this W pattern needs to fulfill this area here, which is more like an optimization zone. So we can still expect more reaction or downwards push at this point. That's why I pointed out this move needs to come down here. Since this ascending triangle has already been broken to the downside, it needs to correct. Then we continue to push to the downside more. Then we can see that price could use this optimization zone over here to find a support. But if it doesn't, we're going to now use this zone over here to find the support, and then we continue to push to the upside. So that's what I currently see on oil. There is more increase in price of oil coming, and more inflation and more recession. So over here is gold. Gold is I think gold moves slowly before the Fed decision. If gold moves slowly before the Fed decision to the upside, because what based on the terms you see on DXY, we expect gold to move slowly to the upside into these validation points over here, and then we can see some drop to the downside on gold. So we have validation points here that gold can fulfill its efficiency to the upside. And from there, we can expect market to go down. But if market breaks that point, we could see price go up to the point of let's go to the monthly time frame. Let's go to the monthly time frame and mark this out, because one monthly time frame has 4 weeks, and 4 weeks has 5 days. So on the monthly time frame, we can see that we have validation points at this point over here, which the market has tested a monthly high. After this, we have another point over here. So we can also expect market to still come back to this point on the monthly, which is more of the major resistance area. If we were to form this resistance, this is meant to be the major resistance on the monthly. The tip of the what? Sorry about that. It is loading. Okay, good. It is loading. Okay. Okay, so on gold, this is what I see mainly on the monthly. When market gets to this point, we can expect some drop in momentum. But if it's for next month's candle, next month's candle has high chances of going into this resistance, and there'll be a drop in momentum. What I mean by drop in momentum is that this candle was huge. This red candle was huge. Let me show you guys. This red candle was huge. This red candle was huge. This red candle was huge, and then this red candle was slightly small. It's very, very small. Very, very small. We're going to see a rejection candle at this point when the market gets there. So since we know that the monthly still has more up push to go, and we can use the point of 19,000 19 $1,975. So over here now we see that we have a daily validation point, and this is our daily validation point, which the market wicked inside it. Sorry, weekly validation points, which the market wicked inside it, and there was a little drop. So for next week now, we can expect, because it's a new week, we can expect market to what? Create a new high, then drop down. We expect market to create a new high, because we have 5 days. We have 5 days to go, and from this, we can expect market to still come up here, fulfill efficiency to the downside, and then drop. It's going to drop to the side before Fed's news, or before Friday, when we have a non-farm payroll. If there's a sluggish move to the upside, then we start seeing more sales due to the move of DXY. So over here, we already have our H4 validation point marked out inside the daily validation points. Really, the daily validation point is close to the weekly, which the daily validation point is close to the weekly resistance. So that's what I currently see. That's what I currently see in the market. Marvelous. Can you kindly mute yourself? So okay, I see someone has a question. So you can someone has a question. I think someone has a question.
Tony, good
Okay.
evening.
Evening, how are you?
I'm all right, sir. How are you doing?
I'm okay.
Let me get back to you. I have a question, but let me get back to you shortly.
Okay.
Thanks.
Okay, so over here we have this red candle, which is more of our validation point as well on the downward side. So when we see this move to the upside into this H4 validation point before Fed news on Friday or before NFP on Friday, then we can now see more push to the downside over here. If here is broken, we can see another support over here, which the market has high chances of coming into it before any continuation push on the monthly candle, then weekly candle takes effect as well. So aside from that, for Bitcoin, man, I'm all bullish on Bitcoin. Yes, exactly. So Bitcoin broke this. We have this triangle. So if you got it broke this triangle, and from this I expect more push to the upside. The strategy of trading a break to the upside is you enter the candle that breaks that resistance, and then you put your Fibonacci from swing low to swing high of the break. So Fibonacci from swing low to swing high. Wait, where's the swing high? This is swing high. Okay, so this is swing high. So we aim for the 50%, and our stop loss is meant to be few ticks below the support that broke that triangle. So there is 50% we aim for. So for me, I see Bitcoin would go up to $24,578. And if I'm to reduce this, let's go down to the daily time frame. Although I called out a signal, that's ICP, called out ICP's trade. So over there now we see that we have our daily validation point over here. That's where we expect market to now have the major reaction. We're already inside the weekly. The main red candle is a weekly. So this is where I expect market to have the major reaction. So inside that point there now we expect more a reaction where or drop in momentum. There'll be a drop in momentum. So or fade in momentum, because there's always a rise in momentum and a drop in momentum. So when the market goes into this daily validation points, then I can now expect other reactions. So let's go into the fundamentals for the forex markets, to be specific. So the fundamentals for the forex markets to today, Monday, by 9 a.m. we have retail sales on Euro, retail sales year over year and month over month. And for retail sales, which has to do with total sales of products in Euro, and since Euro is known for high sales in motor vehicles like Mercedes Benz, they have to do some calculations month over month. From December, they will compare December and January, and then bring out December's result was 33. It was 3.8%, and consensus is 0.6. So since consensus is lower than previous, it's going to make Euro weak, which was a result of what the market reaction was for last week Friday. It made the market drop. So the way we trade fundamentals, this is one of the tips for you guys staying to this point. The way you trade fundamentals is that if the consensus is lower than the previous, if it is Euro USD, we expect Euro USD to be selling. Then that is what's going to control the markets to the actual comes out. So when actual is higher than consensus, then we expect, yes, a buy. Because I know for sure the retail sales is going to be higher than 0.6% because last month's on December is 3.8%. Is 3.8. So the actual can be probably 3.9 or 4%, but it's going to be higher than 0.6. And that's the news that's going to move euro by 9 a.m. tomorrow morning to the upside. It's going to move euro by 9 a.m. So that's where we now expect this push we want from euro to complete. Because I told you guys we expect a correction on euro USD. A correction, not a reversal. After we see that correction, then we can now expect more drop on euro USD. It's loading up. Let's go down to H4. So like I say, we're currently on a validation point. So from this validation point now, we expect market to go to the upside, fulfill some efficiency over here. There's an efficiency over here. So we can expect market to come back into this point before we see the next drop. But that's what I see on euro USD on Monday. This move has high chances of pushing market to the upside. Then the next is on Tuesday. We have exactly by 1:30 a.m. we have AUD major news, retail sales as well. And since this is lower than this, also the ripple effect is going to happen on AUD, that AUD is going to reduce in prices against USD. So USD pulled AUD to the downside. But when this news turns out to be positive, we expect more push to the upside. Then the same thing implies on Tuesday by 8 a.m. till 2 p.m. Wow, Euro has a very deep trading day on Tuesday by 8 a.m. to 2 p.m. Tuesday. So there's going to be some major reactions in the market, which I expect this news to push the market to the upside. But the major news I think that is going to push the market to the downside is on Wednesday. This is when I expect market all the sales that we're expecting. So majorly for scalpers, you can just scalp in and out of the market, take some pips, you're done for the day. So that's on Wednesday when this Fed news, we have this Fed interest rate decision, very, very important news, which has high chances of moving the market to the downside. And then we'll trade live on Wednesday. We're going to trade live, so you guys should pay close attention. We're going to do some live trading on Wednesday. So it's either going to be the morning session by 9 a.m. till 11 a.m. or we're going to do the New York session, which is going to be by 2 or 1:30 a.m. So we'll be on time till the evening around 5 p.m. So it all depends. I'm going to check out my schedules and then I'll give you guys some updates on that. Then the most important news of the week, which we expect market to have high volatility, is the NFP. You can see that there. So thank you so much. Do you have any questions? Anyone with any questions? Any questions? Okay, yeah, unmute yourself and ask your question.
All right, Tony, thank you for the time. I think I have a few questions. Like, the way Bitcoin, the up down trend has been going to Bitcoin. Is Bitcoin a good buy at this point in time?
Yes,
Like,
I showed you guys.
for market entry into Bitcoin.
Yeah, Bitcoin is a good buy at this time. Bitcoin is a good buy at this time because I already showed you guys that the market is moving to the upside on Bitcoin. Let me show you guys that. For this like for the Bitcoin chart, the market is moving to the upside rapidly. So you can see that I already marked this out on this, mainly my crypto charts. So see that this is the monthly high and also the weekly see that we have this green point, which was this month's candle, January candle, which was a good signal. This is a very good signal for the MACD. So this is on the weekly. We have a weekly resistance, which is where I expect market to come into, like I say, the 24,500 mark. So now we have on the daily time frame, we have this breakout, which we have been waiting for a very long time. There was this resistance over here which the market broke to the upside and formed it into support. So the market has been just ranging, accumulating orders. This accumulation phrase, and we marked out the high and the low of last week. So currently we expect the market to break out. The market has broken out now from that high. So this is more like a weekly resistance. This is more like a daily resistance. Inside this point now, we will have 24,500 to 24,000. 25,249. This is where we can now expect some major reactions in the market. Israel can expect some major reactions, like a drop in momentum. But for now, Bitcoin is a good buy because my structure, it fulfilled my structure, which we wanted it to fulfill. It fulfilled the structure, which is an ascending triangle. It's an ascending, this is the ascending triangle. And like I said, the principle to trade ascending triangle is the first candle that breaks out that resistance to the upside. The first candle that broke it out. That first candle that broke, that is your entry. That was your entry. At this point, this was your entry. If you're meant to be monitoring it on this time frame, 4 hours time frame, that was your first entry. Then you put your stop loss few ticks below. I'll take you down to smaller time frame, and we can aim for this point. Or no, we use the Fibonacci. We always use the Fibonacci from the swing low to the swing high of that move, the whole move. This is swing high. Then we take 50%. 50% of the extension. That's what we take. 50% of it, which is close to the what daily resistance, weekly resistance, also daily optimization zone. So this is where we're going to see some major drop in momentum. This is where we see some major drop in momentum. So if I'm to go down to 15 minutes, I'm to go down to 15 minutes to get a better point for our support, which was this place, few ticks below this point. This was meant to be our support, and you go in for your buy. So currently market has moved up, but yes, it's still going to give you some re-entry opportunities. It's still going to give you some re-entry opportunities. So for asking that question, we have this validation point here, which has fulfilled the efficiency. This has fulfilled the efficiency. That's the efficiency. This has fulfilled the efficiency. If the market is to come down, to come down to this point again. We can place some pending order. That's where the market come down to this point again. For those that missed the first entry, you can place some pending order, and then we still expect market to go up. If you're a sports trader, yeah, you can take the risk. The market still has a long way to go, but if you're a future trader, wait for the market to come into this point. You can place your limit order, and then we go for the buy. So I guess that's all. So thank you so much. We have less than a minute to go. Like you guys all know, this is Anthony Phillips Njoko. I'll be dropping this video on YouTube. Please like, share this content, and if you have any...
So put your hands up in the air.